Hey everyone, welcome back to the channel. Today we are breaking one of the most important topics for anyone starting with their financial journey, which is how to build credits from scratch and do it without falling into debt. Because let's be real, when most people hear build credits, they merely think of credit cards, loans, and owing money. But the truth is you can build strong credits the smart way with no interest charges, no maxed out cards, and no financial stress. If you're in your late teens or early 20s, maybe you've never had a credit card, maybe you're international and new to the US, or maybe you're just trying to bounce back from past mistakes and start fresh. Whatever the case is, this video is going to walk you through step by step, no fluff, no risky strategies. Let's start with the basics. Your credit score is essentially your financial reputation. It's a 3-digit number that tells banks, lenders, and even landlords how trustworthy you are when it comes to borrowing money. A good credit score can save you thousands of dollars over your lifetime. We are talking lower interest rates on car loans, easier approval for apartments, better credit card offers, and eventually lower mortgage rates when you buy a house. Now, the biggest myth out there is that you have to go into debt to build credit. That is absolutely false. You don't need to carry a balance, you don't need to pay interest, and you definitely don't need to be broke just to boost your score. So how do you actually start building credit the right way? Well, the first step is getting something called a credit account to report your activity. That usually means a credit card, but don't worry, there are safe ways to do this even if you're brand new or have no income. The easiest way to start is with a secured credit card. A secured card works just like a regular card, but you put down a refundable deposit, usually around $200 to $500, and that deposit becomes your credit limit. So if you put down $300, you can spend up to $300. It reports to the credit bureaus just like a normal credit card, but there's no risk to the banks since they are holding your deposit. You use it for small purchases, pay it off in full every month, and over time your score grows. If you already have a little credit history or want to skip the secured card, another option is a starter credit card or a student credit card. These are made specifically for people with no credit. Just make sure you choose one with no annual fee. The goal isn't rewards right now, it's to build a foundation. And here's the key to all of this: only use the card for small purchases. I'm talking about gas, groceries, a Netflix bill, whatever you were already going to buy, and then pay it off in full before the due date. Don't carry a balance, don't wait to be charged interest. Just treat the card like a debit card that happens to build your credit score in the background. Another method that works, and this is underrated, is becoming an authorized user on someone else's credit card. This means a parent, sibling, or someone you trust adds you to their card, and the payment history starts getting reported on your credit profile too. You don't even have to use the card. Just being on the accounts can help you build credit, especially if they have a long history and good habits. Now, once you've got a card open and it's reporting, here's what actually impacts your credit score. The biggest factor, about 35%, is your payment history. That means pay your bills on time, always. Even one late payment can set you back for months. So set up auto-pay for at least the minimum payments and you'll never miss a due date. The biggest piece is credit utilization. This is how much of your credit limit you are using. For example, if your limit is $500 and you spend $400, you're using 80%, which is considered high. Try to stay under 30% and ideally under 10%. So if you have a $500 limit, aim to spend no more than $50 to $150 at a time. That's why it's smart to use your card for one or two small things and then pay it off right away. Another factor is length of credit history. So the earlier you start, the better. Even if you're only 18 or 19, getting your first card now gives you a huge head start. That's why I tell people don't wait until you need credit to start building it. If you wait until you're trying to get an apartment or car loan, it might be too late to qualify for good terms. Now, there's a common question I hear all the time: should I open multiple credit cards to build credit faster? And the answer is no, not at first. One or two cards is enough to start. Focus on building habits, not hype. Every time you apply for credit, the lender does a hard inquiry which can ding your score a few points. So space out your applications and only open new accounts when it makes sense. There are also new tools that let you build credits without a card. One example is Experian Boost, which lets you add on time payments for things like utility, phone bills, and streaming services to your credit report. It doesn't work for everyone, but if you've been paying bills in your name, it's worth trying. Another is self-credit builder loans. These are basically savings accounts in disguise. You pay a small monthly amount like $25 or $50 for 12 months, and at the end, you get your money back. The lender reports your payments to the credit bureaus and it builds your score while helping you save. Now, here's what not to do. Don't max out your cards. Don't miss payments. Don't co-sign for anyone you don't fully trust. And don't believe anyone who says you have to carry a balance or pay interest to build credit. That's a lie. You can have amazing credits and never pay a single dollar in interest. Building credits isn't about being rich. It's about being consistent. It's about proving you are reliable over time. And the earlier you start, the easier it gets. Think of it like going to the gym. You're not going to see massive results in 1 week, but if you give it a few months of consistency, and suddenly you've got a momentum. So if you're just starting out, here's the move: get a secured or student card, use it for 1 or 2 bills a month, pay it off in full, set up autopay, and repeat. That's it. You don't have to overcomplicate it. With that being said, thanks for watching. If you found this video helpful, make sure to hit the like button and subscribe for more videos on money, investing, and financial freedom. And let me know in the comments, do you already have a credit card or are you just getting started? And remember, building credit doesn't have to mean getting into debt. It just means proving you can handle money the right way. So start small, stay consistent, and your future self will thank you. Catch you in the next one.